Hello and welcome back to the School of Stock Markets YouTube channel everyone, and we are back with another stock research for all of you. So before starting the video, I would like to mention a disclaimer. These video that we present to you consist three things. Number one is factual information about the company's business which we derive from the company's website or from other media houses. Second is factual figures about the company which we derive from the company's website and other media houses. And third and the last thing is our opinion about the company, that how this company can perform in the future. These videos are in no way intended to give you any stock advice or tips. One should do their own research before investing or trading in the stock market. So let's start with the video. So today the stock under consideration is Texmo Pipes and Products. Texmo Pipes and Products is a public limited company which was incorporated on July 3rd, 2008. The company is engaged in manufacturing a range of PVC and HDPE pipes, suction and delivery hose pipe, rigid PVC pipe, elastomeric sealing ring fit PVC pipe, PVC casing and ribbed screen casing pipes, SWR pipe, plumbing pipe, conduit pipe, capping casing strips, column pipe, HDPE, plain pipe, sprinkler pipe, PLB, HDPE, cable duct and drip irrigation system. So this is a really wide range of product that this company is offering. So here one thing which is very interesting and many of you must not have heard about it is HDPE pipes. So what are HDPE pipes? So HDPE pipe is a type of flexible plastic pipe used for fluid and gas transfer and is often used to replace aging concrete or steel mains pipelines. Made from the thermoplastic HDPE. HDPE is high density polyethylene and strong molecular bond make it suitable for high pressure pipelines. HDPE pipe is used across the globe for applications such as water mains, gas mains, sewer mains, slurry transfer lines, rural irrigation, fire systems, supply lines, electrical and communication conduit, and stormwater and drainage pipes. Right, so these HDPE pipes are used in this different areas. So here we have seen that this company definitely offers a wide range of pipes. And if we look at the company's website, here you can see they offer this many different products: CPVC pipes and fittings, SWR pipes and fittings, plumbing pipes and fittings, submersible column pipe, rigid PVC pipe and agricultural fittings, casing pipes for tube wells, HDPE coils, PLB HDPE duct, HDPE sprinkler pipes and fittings, drip irrigation system, suction hose, garden pipes and conduit pipes. And apart from them, they also provide solvent cements, right? Solvents which we mix in the cement. So there is a really huge range of products are there. And apart from that, these products are used in different areas. So definitely this company has a really long list to offer to its customers. Now let's see the financial figures of the company so we can find out whether offering of this huge range of products helping their financial figures or not. So let's move to the financial statements for the company. So before reading, you can see these statements are rupees in lakhs. So this is about the property, plant and equipment. So obviously they are in a manufacturing business. So PP is a really important aspect of their business. And here we can see they have reduced their PPE, but not a big drop in their property, plant and equipment. So I think it's fine, right? There is not a huge drop in the property, plant and equipment amount. So it's okay. Their working capital in progress is dropped, which is not necessarily a good thing. I believe more working capital in progress means that more raw material they are transforming into the fixed goods. So maybe because of dropping orders or their projections that their sales will go down, that's why their work in progress capital is dropping. They don't need more money to be induced in the working capital, or maybe because their sale rised so highly that they were not able to cope up with that. So that can be both ways, right? Not necessarily good thing or not necessarily a bad thing. Here you can see their inventories is also dropping, right? Their inventories is also dropping, might be because of rising sales, or because of dropping sales they are not increasing their inventories right now. But let's move to the major portion of the financial statement, which is statement of profit and loss, obviously. And here you can see their total income has increased by almost 10,000 lakhs, rupees in lakhs and figures in thousands here written. So almost 10,000 lakhs their total income has increased, which is a really good thing, right? So their income is increasing means their sales is increasing. That's why their inventory is dropping. So it is a good thing. It is a good thing that the inventory is dropping and sales is increasing. It is a good thing, but it will be more good if their cash generated from the operation is also increasing. So that means their capital, their inventory is going down, their income is going up, and their cash is also going up, which means that they are receiving cash. They are not doing just credit sales, right? So we will see that later, but definitely their income is increasing. Their total income is increasing, which means that they have higher sales compared to the previous year. And profit for the year, if you see, almost threefold increase we will witness here, which is a really good thing. Obviously, no need to say it. It is a really good thing. Almost threefold increase in their profits. Brilliant, right? Total comprehensive income for the year also you can see almost threefold increase you will find here also. So it's quite impressive. Good thing. So they are definitely using their wide range of products brilliantly. Their sales and their profits are increasing. So it's good. Incredible, I would say. Threefold increase in the profit is incredible. Definitely a growing company, right? You can see previous year their profits were too low, right? 476.85 lakh is pretty low, right? But this year you can say that did some really good profit. So means they are a growing company. There is no doubt about that. Threefold increase is a great increase. No need to say. Right now, if we move to the cash flow statement, this is a statement of changes in equity. We don't give much focus to this. We are moving to the cash flow statement, and you can see here cash generated from operations, and you can see almost doubled. So their cash generated from the operation doubled from the previous year. So it's a really good thing. Their inventory is dropping because their sale is rising. Now those sales are not in credit but in cash. They are able to generate their they are able to generate the cash from those sales. So it is another great sign. It is almost doubled. So their profit increased by threefolds. Their cash generated from the operation increased by twofold. So it is a really good sign. Now cash flow from the investing activities, you can see they invested less in the their investing activities, and I think that is the reason. You can see here purchase of property, plant, equipment and intangibles. You can see here the previous year it was around 737.61 lakhs, and this year it is around 269.11 lakh. So this is the drop in the PPE, which I don't find right, because obviously they are a manufacturing unit. They need PPE. They need to update their PPE, and it is not a good thing. That's why their PPE dropped in the balance sheet we saw earlier, right? So net cash used in the investing activities dropped, and then you can see net cash used in the financing activities. So from the last previous 2 years they are not raising any borrowings, right? You can see they have definitely proceeds from issue of preferential equity shares. So they have taken money from the preference share source, but they are giving away or paying long-term borrowings more and more, right? So which I don't know, not necessarily a good thing. Many of the companies nowadays in India are focusing on reducing their debt to equity ratio, right? So they are reducing risk in the company, but I don't think that this is necessarily a good thing. What is necessarily a good thing is definitely this: cash generated from the operation is definitely a good thing. Dropping in the investing activities is definitely a bad thing, but more outflow from the financing activity, it is literally a little dicey thing. Maybe it's good, maybe it's bad, right? We will see that in the future. But for the current statement, threefold increase in the revenue and doublefold increase in the profit for the year, it's brilliant, right? So this is it. You can see there cash and cash equivalent for the year has decreased, obviously because they had huge outflow from the financing activities. They paid a lot of short-term borrowings, right? I think they were funding their working capital by short-term borrowings, which they paid off, right? So not necessarily a good thing, but not necessarily a bad thing also. So this is the financial information about the company. Now we have point out some bullet points about this company which makes this company a desirable investment. Let's move to that. So here you can see sector and industry of the company is plastic product. Market capitalization you can see 248.01 crore. So definitely this is a small cap stock. Enterprise value of this company is 247.55 crore. So you can see fairly it is a good enterprise value company. Promoter holding stands at almost 44.5%. So it is a huge amount of the shares of the company are still held by the promoters, which is a good sign in most of the cases, right? And foreign institutional investors are also interested in this company. They have vested by 1.07%. Promoters holding pledge is 0%. Earning per share is also fair enough, 5.66. P is 15.18 and industry P is 24.42. So fairly low from the industry standard, which means this company is undervalued. And then return on the equity is 6.96 and ROC is 12.1%. So now one might find that this ROE and ROC is really low. But one thing which we need to notice is that previous year their profit were very low. This year they have increased their profits by double-fold, right? And their revenues by threefold. So the thing here to notice is that they are increasing their profits. So definitely they are growing with their ROE and ROC. So growth matters more than what is the current condition, right? If you are growing, a company is growing, it's a good thing, right? From an investor's point of view, a company which is giving 20-30 ROE is definitely a good company, but that company will obviously ask a huge investment from your side also. This share trades around 60-70 and giving a ROE to ROC 6 to 12%, and then this company is a growing company. So might be next year this ROE can go up to 8%, 9%, 10%. So this company is in a growing pattern, right? That's why this ROE and ROC is not too bad. It is a good, fair return they have given. A strong annual EPS growth. Obviously, earning per share is also growing. The reason is that their profits are growing. They are effectively using capital because their ROC is improving in last 2 years. We can see that their profits is increasing. Definitely ROE is also improving from last 2 years. Their return on asset is also improving from last 2 years. Company with low debt and even paying out the debt, so making it even more a low debt company. Revenue is increasing for the past 2 quarters, as we have also seen. A strong cash generating ability from core business, improving cash flow from operation from last 2 years. This is a thing to look out in every company, and this company has a great cash flow from operations. Annual net profit is improving from last 2 years. We have seen that in the statement of profit and loss. Zero promoter pledge, another good thing. FII, FPI or institutions increasing their shareholding in this company. So this is an undervalued growth stock. This is what we think. This is a high momentum stock and highest recovery from the 52-week low. So this is our point of view. We think this company is a really desirable investable company, but you should do your own research before investing or trading in the stock market. So thank you so much for watching this video, everyone. Please do like this video, share this video. Do not forget to subscribe to our channel. See you in the next video. Thank you so much.